This is a video just going to give you a preview of the week for in the forex and precious metals, oil, and stock markets. Um, I'm going to cover these kind of in order, but also I might jump around a bit just because there's a lot of correlation. So what I'm going to start with is FX. Now, one thing to keep in mind about the forex markets these days is that there's a great deal of correlation between dollar yen and the euro and gold. And these what these do really dictate a lot of what's going on in the markets. Um, right now, as so just to describe, I'm going to start with the dollar index. Now, the dollar index is very important because obviously it's a basket of dollar currencies, so and euro makes up 2/3 of it. So in many ways, it's often looked at as like a flipped euro, but it's a bit more general than that. So on this dollar index, on this daily chart, you obviously had this breakout of this triangle, and then you had the fall through. Well, this breakout, it's pretty much achieved. So the breakout is usually measured by the distance of the first low and the first high. So it would be this high down to here, and that's been achieved. The target was just right around here, and it obviously got there. So you can see this distance is more than, if you just eyeball it, more than this distance. Now, what's going to happen next? The trend has obviously been up. The problem is now you have on this daily chart, you have what can be viewed as a lower low. This low is lower than this low, and so this is going to bring in selling and or people looking for either lower low or at least a drop down before a continued move up. That drop down hasn't really occurred. You could say this was some attempt at that, but it was the fact that it was so short lived. It doesn't really seem like it was a proper, drop. Like this might be a proper drop. So I don't really think that really has happened yet. And now what you have is something looking a bit like a head and shoulders. So a shoulder, head, shoulders, and some people are going to be trying to play that right shoulder. That can be a little, I don't want. I guess maybe dangerous is a way to describe it. The reason is yeah, this could be looked at as a right shoulder, but the problem is that it doesn't. It's not going to be that. Most of the time it's not really that perfect. It's not really that perfect where you're going to get like a right shoulder right where this left shoulder is. The other thing is this is sort of extending out where this is very short, and so usually these off-looking head and shoulders tend to work less often. The other problem is that when I look at the euro and the dollar yen and gold, they don't look as favorable for like head and shoulders type situations. So I am going to be looking a lot at the euro, particularly dollar yen and gold, to be looking at that. And so I'm going to keep it in mind, and certainly keep this in mind. But you don't want to be you don't want to be looking at just the dollar yen chart and think, oh well, this is a head and shoulders, so I'm gonna take that. When I look at when you look at dollar Swiss. Dollar Swiss is in a very similar situation. You have this breakout. See, you have this in this daily chart. You have the triangle in the dollar index. Well, you have a triangle. You had a triangle in dollar Swiss, and dollar Swiss. The triangle hasn't really fully played out. You can see this distance from this low to this high is much larger than the actual breakout move. So that would forecast much higher up. The problem is this is pulled back and sort of almost retested this breakout area much more than is probably normal. And so whereas I have a conclusion in dollar index, I don't really have a conclusion in dollar Swiss. Dollar Swiss is also in certain ways more bearish because I have a much clearer lower low. So this is going to bring in somewhere in this area people selling, right? to a lower low, lower high type, lower low, lower high, people targeting another lower low. If that happens, obviously that's going to be up in the euro, down in dollar index, and down in dollar yen, for now. Okay. One problem I have with all of this, and I'm gonna get to this, just very soon, is that I'm very bullish on dollar yen, and for me to think that dollar yen is just gonna like get back into like the 109s, 108s, 107s, yeah, that can happen. It's just that I'm not like I'm kind of not. The correlations would need to change because I'm not completely excited about the possibility of like shorting dollar yen and another 400 or 500 pips. Well, if dollar is Swiss and dollar index really break down. So when I look at the dollar yen, I see this chart of dollar yen, and what you have is obviously you have this massive rise from the low 100s. So you see this chart. This chart is a 4-hour chart, but this right here, this is right around the 100 level, and you had obviously that massive rise close to 120. You had the first lower low, and then ever since it's been breaking down. Now the problem is it broke down to new lows, and then it just kind of barely did that again. And so I have basically like a flag type of situation here, right, where you have slightly lower highs and slightly lower lows, and actually you didn't even have a lower low this time. You had a higher low right around the 112 area, and so certainly this can break and you can see new lows, but you're seeing attempts for dollar yen to hold and people somewhat reluctant to sell it down. And the problem is you cannot really buy this totally bullishly until you get a major higher high. That hasn't happened yet, and so I think you're getting some people who like the trend is sort of down, but there's a reluctancy to continue to sell this significantly. But there obviously is going to be a reluctance to buy this, right? So hold on for 1 second. So you're just not gonna get like obviously the clear buying that you had been getting before, and but certainly shorting this is somewhat difficult to do. Given how strongly dollar yen moves up, I think people just are hesitant to be selling this in this location, okay, where you're kind of near the lows in the 112 area. It's just, every time it breaks a new low, it's just really minor. It happened very minorly here, minorly here. It's just you're getting some sort of like rough triangle pattern where you're having slightly lower highs and lower lows, possibly, but not really anymore. We'll have to see how this plays out. Now, if 112, 111.70ish, 111.50ish, that area breaks convincingly, that'll change it. But until that happens, it is difficult to short this. So what will be important is using correlation, because if I just take dollar yen, I'm like, oh, I'm just gonna like long it in the 112 or mid to upper 111s. I'm not gonna have a lot of confidence behind it, and a lot of traders might say, well, you should just be confident. Just like try to like be confident in what you're doing. The problem is the confidence has to come from information, and just using that piece of information, that's not strong enough for me. So I want to be looking at euro, dollar index, dollar Swiss, but in particular gold, because of the strong correlation between gold and dollar yen and dollar index. Now, before I go to gold, I'm just going to cover euro dollar very briefly. Euro, I'm just going to cover it briefly because it's very similar to dollar Swiss and dollar index. This blue area is that major resistance where this happened. I've had it highlighted for a while on my charts, 108.50 to like a little over 109. But and you that would sort of be maybe the word, not the neckline is, but you'd have that as resistance. If you remember that head and shoulders on dollar index, you have that reverse head and shoulders here on euro dollar, but you can see it looks even less like a head and shoulders here, because look how extended this is getting. This isn't really looking as clear like a head and shoulders as is dollar index, but you're having some of that attempt where that 105 area is holding as a good deal of support. Can that happen? Yeah. Would I rather just looking at this chart? Of course, I'd rather be looking for longs in euro dollar. The problem is that I'm kind of not interested in taking just outright directional positions in dollar pairs until it becomes clear in the market, in the charts, which way prices are going to break, things like that. So I think there is a bit of, there's not really a clear trend in place, and there are signs that this is reversing, but the problem is you have dollar yen already at, major correction levels where you'd expect major buying to occur, and you just don't have like clear trends, clear breakout situations, nothing like that. So this is going to take a while, I think, longer before you're going to get a lot of the clear price action that you had, where euro was just falling off a cliff. It's just it's not really a great trending environment. So in these cases, taking prices off strong support and resistance, and then using correlation to your advantage helps a lot. Moving on to gold, which you've had in gold. Gold is very, what you've had in gold is a major move up. So if I look at a weekly chart in gold, forgive these candlesticks. This platform is really weird, but if I look at gold, you've had a major drop from obviously the 1900s, but now it's been lower, low, lower, high until you have the first major higher high. This high broke these highs. With that happening, you're going to have higher lows forming. Okay? You have a major higher low, and now you have a significant rise up to threaten a major reversal on a long-term basis, and that's what's happening. And so you had very, very strong buying action, and you had this resistance around 1150, this prior low and this prior low broken. So that was resistance for a bit. You had this flag forming right below 1250 until it broke, and now you're getting a pullback. Certainly what I would watch is this. You had a break to new highs to the 1260s area before you got a lower low. This has turned bearish temporarily, but it's going to provide an opportunity to go long somewhere at 1250 to like 1245-ish, because with this lower low, you're going to invite sellers until you get buyers at this roll reversal. So what gold is actually a lot clearer, and it's saying down on gold, or up first in gold, which would be up in euro dollar, down in dollar yen, before a good move down in gold, which is up in dollar yen, down in euro dollar, before the major move up. So really, if I use gold, which is probably the clearest thing to use, I would probably look for down first, sell first. Once gold gets a bit higher into maybe the mid 1250s, if it gets there, or upper 1250s possibly. So I'd basically look for a sell in gold, which is a buy in dollar yen. If you just use that correlation, before turnaround and reversal. So I'll look for basically down in gold first to trade, and then up in gold to trade, and then I'll just take it from there. And if I use that, that's actually a better way to trade currencies, at least these days. So that is what I'll be looking for. And Aussie and Kiwi. If I just look at Aussie, I mean Aussie is this is a situation where you have Aussie at major resistance on this daily chart. Obviously, these major highs, price has gone there. You have this trend line. You've had a huge unabated rise in the Aussie for a while, but it's slowing down at resistance. But the problem is you haven't really had a break to new lows. So once one of these lows gets broken, that's going to bring in a lot of selling. Until then, you'd have to buy right at the lows. You know, just look at where the lower wicks are, or lower parts of the candlesticks are. But that's very hard to do. I'm not really interested in doing that. I'm going to wait for a break because that's what it looks like is happening. It's going to happen before I look to sell it down. Obviously, if this breaks down, I would look for euro to break down and up in dollar yen. So I have a lot of these forces in play, and so I don't know how long this will last, but certainly long enough where you know, I am going to be looking at Aussie dollar for clues and cues as to what to do with everything else. If Aussie dollar breaks down, euro is more likely to break down, up in dollar yen, down in gold. But we'll have to see because you know, that correlation with gold, I don't think that'll last a long time because I'm very, you know, long-term charts are very bullish dollar yen, are very bullish gold, but they've been moving in opposite directions, and so lately, right? So either you know, you're gonna have gold dropping and dollar yen, you know, rallying, like, you know, strongly moving up for several months or years, at least on long-term charts right now, or you're gonna have if you use that correlation, or you're gonna if you look at them independently, they're both gonna go up. So that correlation is gonna have to break. So basically, right now I'm really trading the short-term correlation. But but I'm going to be watching for that correlation to shift. Certainly, I'm going to be using gold a lot, and then also I'm going to be using, you know, once Aussie and the Kiwi dollar come back into play. Once, like, you know, let's say Aussie breaks down, they're also going to provide a lot more information as to what to do. So, you know, again, right now I'm using like dollar yen, gold, euro dollar, dollar Swiss, pairs like that. But right now with Aussie. Aussie is sort of in this holding pattern and QE in this holding pattern. I'll have to, you know, my sources of information are limited. In terms of pound dollar is sort of in this range pattern, basically between like 120 on area in the low side to around on this daily chart, around the mid to slightly upper 120s. It's very difficult to trade. It's basically just support and resistance. It's not as correlated with the other dollar pairs these days, and so basically it's just a support and resistance. Now, what you had recently was a breakout to the upside in pound dollar. So you had this triangle break to the upside, but that break failed. You had to break down, then you had to break back up. When that usually happens, you have a breakdown, breakout, break back down, and then break back up. Usually that sort of breakout situation is sort of negated. Now you're getting support because it's broke back up, where at this support level you're getting some buying, but it's not. It's certainly not the breakout situation it was. It's just buying off support. So I'm gonna. That's sort of what I'm looking at. I'm gonna look at extreme levels for buys and sells. So if pound dollar obviously gets to there, I'll look to sell it. If price gets back down to these lows, that will be the major buy area for me. And I think that's maybe a very safe way to play it for this week. And then when I look at oil, very quickly, in oil I have a situation where you have a weekly head and shoulders. So this is a weekly chart of oil, Brent oil. So head, left shoulder, head, right shoulder, and a breakout. What's happening now is you have what almost looks like a flag, and it's going to break down. But if I even look at it, if I look at this in another way, you could say this is almost like I don't know, like almost like a breakout situation where it's broken to a higher high and it's pulled back and you're going to get moved up. On a long-term basis, that would make more sense, but you haven't had enough confirmation where that's clearly happening. And so certainly I'm looking more for a long situation for buys in this is a before it was a Brent chart, or this is a crude chart. I'm looking for more buying opportunities than selling. So this is more obvious where you're having moves up. Okay, so I'm looking for more buying than sell opportunities to buy than sell. But this is certainly not like a runaway. Like, you know, this is really like in a breakout situation. It's possibly beginning, but I'm certainly going to be waiting for bullish buying signals where you get a lot of strong volume, where you basically get like you know, like a strong volume like this green after a period of almost just back and forth to give me a sense of direction when trading oil. So watch out for that. That's just something to keep in mind. Anyway, hope this was helpful. Again, remember the importance of gold and the dollar yen right now for trading. And then when the Aussie breaks, if it does, that will also be a key indicator direction for the other dollar pairs as well. All right. Good luck for this week. See you. Talk to you later, I guess.